Good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. The market continues to bleed at this point of time. We are below the mark of 24,200. So no resurrection as such. A couple of attempts were made, but they too failed by the end of the day. And right now we are staring at the levels which are close to the lowest point of the day. So worrisome Wednesday is how we are calling it today. So below the mark of 24,200 at this point of time. In terms of the sectors, it's pharma stocks which are outperforming a bit. Remember, rupee is at record low levels. So typically the export facing companies tend to do better. Mankind, however, has domestic facing exposure, but that stock is doing well. Aurobindo Pharma, Lupin, some of these pharma companies are clearly outperforming today. Having said that, the PSU banking names are stalling. So a PNB, a SBI, a Bank of Maharashtra, all of these will come up for you on the screen. They continue to be on the back foot. In fact, from the banking arena, even ICICI Bank and HDFC Bank, the large private banks, are the ones which are dragging their feet and putting a lot of pressure as far as Nifty is concerned, while Reliance has managed to hold the fort today. So that stock is holding out mildly in the green at this point of time, but overall, quite a bit of weakness across the board. Nikunj also with us. Nikunj, I think that's going to be the nature. Call it the nervousness around the Fed meeting or something more, but it's clearly sideways with a weak bias.
No, the bank Nifty is just not supporting the market, which it was supposed to support the market. So frankly, from the prism of the market, it's the disappointment in the bank Nifty, which is now getting magnified. I mean, it was supposed to hit an all-time high, but between yesterday and today, the fall is about 3% broadly. And that is again an indication that FIs are selling. So it is getting, you don't have news, you don't have any events. You have a market which for next 8-10 days will only be hostage to flows, opinion and technicals. And in that kind of a market, if flows, they suddenly come, you see a rally. And you see a bad day like yesterday, what we saw, you see a bout of selling. And today also, if this data the screen is anything to go by, the selling would be acute. Now the talking point, Kunal, is that large cap stocks have showing signs of topping out. Will mid and small cap stocks follow, and will they follow harder?
So they've started to follow, Nikunj, on the data. So, till just 3-4 days back, there was just 6% to 7% of the stocks on the mid-cap index which are trading below their 20-day moving averages. That data till yesterday's closing was around 36%. Today's sell-off could probably take the data back towards 50-55% of the stocks in the mid-cap, small-cap index, which could now be falling below the 20-day moving averages, and that could just be the starting point for corrections, because we've seen that whenever the index gets back into a corrective phase or a very sudden sharp reversal, the mid-caps and small-caps take some bit of more time, extra time than even when the index forms a bottom for itself. So I think I would probably believe that the mid-caps and small-caps could come back into a corrective phase. The concern for the markets is that the supports are not holding up, and after that Friday's ferocious bounce of 1,000+ points for the bank Nifty and I think 600 to 700 points for the Nifty. Even after that, we've managed to cave in those key support points for the index after just 2 days of very sharp selling, intense selling. So I think that's one of the concerns, that if supports are not, and if such strong supports are not being able to protect, then I believe that the market texture still looks a lot more bleak.
Yeah, the market texture continues to look weak. Let me quickly address some stocks and news. NMDC is in focus with a drag of almost 7%. Karnataka government has separated iron ore from forest goods, and which technically means that additional duty is likely to be imposed. So on account of that, that stock is lower by almost 7%. Viatech Babak has been under pressure since the start of the day, though it's recovered from the lows, so that order cancellation from Saudi is something which is pressurizing that stock. Having said that, Cipla was doing quite okay, as was the case with rest of the pharma pack. Citi had come out with a note. They're maintaining buy, target price is 1800, and they are saying that the company has filed an ANDA for 2 of the Gatex products in December 23 as partners, and they're expecting the tentative approval soon. So that could be a bit of a fillip. From the broader markets, we're also watching out for what's happening to Piramal Enterprises, because this morning Jefferies had come out with a note. They had an underperform call with a target price of 820. They are saying that the retail AUM growth will moderate but stay near the 25 to 30%. ROA can improve, but only slowly going forward. Nuresh also with us on the show. Nuresh, on the charts, NMDC and Piramal Enterprises.
So both those names came very close to a breakout point, but could not do so structurally. So if you look at NMDC, the previous swing highs were around 245, 248, almost looked like a breakout, and now we are back to the lower end of the range, which is 205. And roughly 195 to 205 has been the low for the last 1 year. So ideally that should hold. It's only when we go below that the trend changes. Then if you look at Piramal Enterprises, the stock actually broke out above that 1100 mark. Now, that was the price point which it was struggling to cross for the last 2 years. Broke out, went up to almost 1280 to 1250 levels, and now 1100 should act as a support. So you've come to 1150, need to see how it, whether it pauses at 1100, 1150 zones or not.
Piramal is down. I mean, the entire NBFC space, with the exception of 5-star today, seems to be just getting it completely, plastered. Shriram was down yesterday. Piramal is down today. This is typical HNI unwinding, which perhaps is happening in some of these good old NBFCs. Dipin Mehta, suddenly
Yeah,
it's looking,
good afternoon.
Suddenly it's looking murky, right? I mean, who would have thought that we will see this recovery? And when the recovery came, the markets have taken a sharp turn in 2 days.
Yeah, Nikunj, I didn't think that the recovery was going to be sustainable, although I was surprised with the spring back up. But I think that the basic problem remains with the market, that being deteriorating fundamentals. And that's evident in the micro factors like corporate earnings, and the macro factors also, which came like GDP growth rate, trade deficit, as well as now we are seeing a rupee depreciation as well for whatever reason. So it's just that the fundamentals are steadily deteriorating, and the markets are reflecting that. No doubt there's a lot of money to be invested and a lot of retail participation is there. But end of the day, fundamentals do matter. So I think that markets remain in a corrective mode. It may be more of sideways, more deeper correction, one can't say. But you need to be a bit cautious and get into some amount of cash if you're already not in cash. I would say 15-20% of your portfolio thereabouts, I would say.
Technologies is perking up. There was a note again of Jefferies this morning wherein they had increased the target price quite substantially. So finally that stock is inching higher as we speak at the highest point of the day. And KPR Mill is the other one that continues to gain traction. Kunal, on the charts of these two companies, KFin and KPR Mill?
So KFin, I don't track, I'll skip that. But KPR Mills is something which is looking attractive. In fact, the third or the fourth consecutive day where the stock has seen higher volumes. Today's volume so far, for example, is around 38 to 40 lakhs on the NSE, and in the last 3 or 4 days, the average volume is around 20-25 lakhs on a daily basis. Compared to that, the average volumes were just about less than 1 lakh or 1,20,000 odd on an average. So that tells you that the kind of buying which has happened in the last 4 days, the price appreciation which synchronizes the buying pattern, indicates that this trend is here to sustain. So the starting point of this 3-4 day high volume move for KPR Mill, that becomes the base for the stock, which is around 1020 levels. And so far the stock is above all its key moving averages, 50 DMAs, their 200 moving averages. So that indicates that the trend is here to sustain and probably build also further for KPR Mills.
That's the take on KPR Mills. There could be further uptick there. Dipan, what about the Pharma pack? Clearly outperforming today and overall has had a decent run this year. Today, some of these domestic-facing companies, Mankind Pharma, Concord Biotech are also doing well, apart from your usual Dr. Reddys, Lupin, Cipla of the world. What do you like within Pharma?
I think Pharma is doing well because of its perceived safety. And it is actually quite a safe sector to be in, especially when you are witnessing slowdown in the economy. And there's so much of uncertainty around the global economy as well. So I think investors are strategically going overweight on the pharma sector. Within that, I think I'd go with the largest company, Sun Pharma. Usual disclosure, we and our clients are invested. And Sun Pharma, I think their entire strategy on specialty products is playing out very well. It's scaling up also in a decent way. And eventually it will lead to higher earnings. And the street also will start to pay a higher P multiple for a superior business model. So that's where we are. There are certain other small companies also, again, disclosure, like we like Kaplan Point a lot. Recently, they have won a very interesting approval for eye ointment as well. And again, over here, I think a very focused business on the Latin America, where it has got very strong competitive strengths and complete backward to forward linkages. So I think that pharma as a sector you should be overweight in. Go for the large cap pharma company. I think Lupin also has done pretty well. And then there are a few select mid-cap companies. And I would also like to keep Strides on our watch list. Something interesting is happening over there as we await the listing of their other subsidiary company. I think it's called OneSource. I'm not clear about the name. But that's something interesting happening over there, which one should keep an eye on.
Okay, we'll watch out for some of these pharma names, Kaplan Point, Strides, etc. on your radar. Naresh, what's the sense on the charts of PVR and Federal Bank?
So PVR tried to make a comeback. We saw a recovery from the same support levels around that 1450 mark. Today we've broken below that. So we go back to the lower end of the range, which has been there for the last almost 3-4 years now. 1250, 1300, that's been the support for the last 2 years. So that could be the next level. Federal Bank has been a surprise. The stock tried to sustain, but could not make a breakout move. So when it was the first one to actually hit a new all-time high in the small cap private banking space, but did not sustain. And we are back into that earlier range of 185 to 200. So we could be, once it stays in this, we again get back to a trading range which lasted for 3 months before.
Okay, so that's the take coming in on some of these stocks, but Federal Bank definitely lower, and as is the case with the rest of the market, grinding lower as we speak. No respite in sight, at least as of now. The small cap index too has managed to dip almost 250 points, a fall of around 1.3% from the top of the day. With that, slipping into short break, but don't go anywhere. Lots more stocks to discuss. We'll do that when we come back. Welcome back. Apart from NMDC, it's Deepak Fertilizers, which is also down 5%. We talked about Piramal Enterprises and the note coming in from Jefferies. Federal Bank down 5%. You also have Motilal Oswal, Ashok Leyland, UTI AMC, JBM Auto. So a lot of quality names are actually on the back foot at this point of time. Dipan, if you have a shopping list ready, which segments and sectors are top of the list?
We don't have a shopping list ready because the view still remains pretty cautious. But let's just wait and watch. We like the specialized retail companies. They've had a bad time last 2-3 quarters. Companies like Go Fashion, Manyavar, which is Vedant Fashion. Then there is Ethos, and there's Metro Brands. These are all specialty retail companies. You could add Page Industries also. So once we feel that urban consumption has bottomed out and starts to look up, that is one segment that we are watching quite closely. And then we like all of these platform companies and waiting for the stock prices to come down, like Zaggle Prepaid, RateGain Technologies, and then there is, of course, our old favorite India Mart, and then Affle India. So that's why I think we are looking at these two segments and also looking for good ideas in pharma sector. Mankind Pharma also is on our kind of target list over there, and the recent money which they have raised for reducing debt certainly will improve the earnings. And let us see how the new acquisition actually plays out for them. So there are a few ideas, but as usual, our strategy remains trying to find superior quality businesses at reasonable valuations, which as of now they are not.
Deepan, hi, afternoon. Cheryl also joining in the conversation. So where does that leave you with the real estate sector? I wanted to understand what's your view on that one. Do you think that it will be able to kind of replicate the move that it has been seen over the last 3 to 4 years at least now when we enter the new year?
Oh, I think they have a base effect to deal with, so you could expect some slowdown. But I think the kind of industry dynamics are very positive. And what we like best is that quarter after quarter, the net asset value or the net realizable value or breakup value of the real estate companies is steadily going up because of new projects, joint development agreements, increases in land value and inventory value as well. So that's a very positive trend. So it's not that the net asset value is static, that also is growing, and that provides comfort. But I have to say that the discount to the net asset value certainly has come off. 1 or 2 years ago, it would be 30-40% or so. Now it is in the range of high teens or thereabout. But end of the day, it's a nice growing industry. It's one of the few, I would say, bright spots within the entire economy, which is still showing decent amount of sales thanks to the premium properties over there. So I'd like to be overweight this particular sector. Go for larger companies. I think the likes of, say, DLF or Oberoi Realty, or even the Doda company, which is there. So I think those are the companies that one could look at from point of view of investment.
Okay, point taken. Kunal, yesterday when we were discussing, you were a bit positive on some of these city gas distribution companies. As we speak, IGL has managed to perk up. Mahanagar Gas is inching higher. What would be your view now? Book profits out of some of them or stay invested? What's the take?
Yeah, I would suggest to book profits because the trends for these stocks is a lot more volatile. We've seen these stocks moving up by a margin of 4-5% in a short span of time, but then eventually these stocks they come back into some sort of a selling spree. So the concern for many of these names was that trends were a lot more inconsistent over the last so many months. When you look at this, for IGL, MGL, etc. Currently, the stocks are still fallen below their longer term moving averages. So even after this bounce, these stocks are still trading below their 50 DMAs and their 200 moving averages. So with that kind of an expectation, I think this bounce should be taken as an opportunity to try and book profits.
Right. But let's put the spotlight then on NMDC actually. That particular counter is in focus in trade today. You had Anisha also market right in the stocks and news that the stock is tanking in trade today, is under immense pressure, and the Karnataka government may be looking at increasing import duty on iron ore. What does this mean and how significant this move is? Let me go across to my colleague Prakash, who has all the details. Prakash?
There's a very significant development coming in as we are learning from our sources that the Karnataka government is mulling to increase duty on iron ore. In fact, the process has been initiated and we are given to understand that the state government will take final decision very soon. Along with that, as you were aware that the state cabinet has already approved the Karnataka Mineral Rights and Bearing Land Tax Bill, where iron ore has been separated from the list of forest goods. Technically, forest goods are exempt from duties. Therefore, state cabinet has decided to remove iron ore from the list of forest goods. Eventually, it will pave the way for the state government to put additional duty on iron ore. Of course, it will help a government to generate more revenues going forward. It is important to note that the Supreme Court had already granted states to collect mining taxes retrospectively from 2005. A very significant development coming in. Of course, the mining rich states will exercise their rights. Most importantly, Karnataka plays a very significant role when it comes to iron ore sector, where it accounts nearly 78% of India's total reserves.
Okay, so that's the latest coming in on NMDC and why that stock is tanking away in the trading session. What else is happening in the market? Let's take a look at the frontline stocks as well, because ICICI Bank, HDFC Bank continue to be under pressure and they are the ones who are the biggest drag on the index right now. Naresh, what's the view? ICICI Bank drifting lower 1300, though today for what it's worth, Reliance is managing to be in the green.
So we've been seeing this rotation happening and nothing really taking the lead. So if you look at ICICI Bank, it came close to the all-time highs. The all-time highs were around 1360. We made a top around 1352 times over the last 2 weeks whenever the index recovered. Now we are back to the middle of the range. The lower end, it has not corrected as much. So 1230 to 1350 has been the range. So for now, we are still stuck till the time we don't cross 1350 and close, the momentum doesn't come back. On the lower end, 1250 remains the major support. Now going into HDFC Bank, that was also a failure in terms of the momentum not sticking up. 1800 has been the big resistance for the last almost 3 years, multiple times, 1750, 1800. Broke out above those levels, went to 1880, and now we're back to testing 1800. Till the time it holds above 1750, would expect it to again make a bounce back.
Deepan, I wanted to understand your view coming in for the cement sector, because this year, the year of 2024, has actually been a year of consolidation for the entire cement sector. How do you see the forthcoming year coming in for this entire space, given the fact that now you will have much lesser players than that as compared to the start of the 2024?
Yeah, there has been a consolidation. No doubt there are fewer players, but it's been a very disappointing year for the cement companies. And we've seen lower prices, stagnant volumes, and all the kind of great rosy projections which were made by the analysts and the company managements that cement will keep on growing at high single-digit volume growth and because of infrastructure and real estate and whatnot. I think those things haven't really played out. And as we speak, I think there's nothing which suggests that the slowdown in the cement industry has reversed. And at the same time, there is massive buildup of capacity coming through, which is going to keep prices on the pressure for a long period of time. And on the whole, I think the return ratios also will suffer for cement industry. So as a group, as an investor, our investors have almost nil weight in cement industry, and that would be our outlook for the sector, to remain completely underweight or nil weight cement. I think a lot of challenges are there within the industry, And there are structural changes taking place, which will make the growth rate slow down significantly for a long period of time.
Not yet turning positive on the cement pack, continue to be underweight. Before we move forward, just wanted to put the spotlight on what brokerages are saying for 2025. You have Citi targeting 25,000 as the Nifty target for next year, which is the lowest perhaps. You have next Bank of America at 26,500, Jefferies talking about 26,600, and then Goldman Sachs is expecting that Nifty next year is likely to hit 27,000. Kunal, if I had to ask you, where would you place your bet? The lowest being 25,000, the upper end being 27,000. Nifty 50 for 2025?
I'll take a more of a modest bet between 25,000 and 27,000 is what I would expect the index to
Way too safe. Not the kind of answer I really wanted.
No, because it's become very difficult in this last 2-3 months. You know, with the
That's why you are the expert and we're asking you.
so I mean, I still have another 10 days till the end of the year.
I'll ask you that question again perhaps at the end of the year. Then Naresh, are you better placed to answer that question? Don't give me between 25 to 27, please.
For the end of the year or the next year?
End of the year. End of
End of
next
the year,
year. End of next year.
End of next year, I would expect 27,000.
Okay, so at least he had a number in mind. Dipan, similar question to you.
The target, I didn't get the question, sorry.
Nifty next year, and we are just going by the brokerage estimates. So Citi is expecting next year Nifty to be 25,000. There's estimate of 26,500, 26,600, and then Goldman Sachs believe 27,000. What will be your estimate?
I think I'll go with 26,000. It's not a high conviction call. It's just you can pick any number.
Yeah.
But look, there are a lot of uncertainties, and it may reach 26 or 27,000 by the end of the year. But it could be a challenging year, and you may see a lot of volatility as well. One big event is going to take place early 2025. That is the Trump presidency. And they have said so many things and they want to do so many changes, whether it's tariffs or a lot of other government policies. Let us see whether that actually takes place, because that will kind of shake up the global economy, it will shake up the world markets as well. And that certainly can have implications for us.
Right, so that's the likely target that Deepan is expecting for Nifty come next year end rather. But thank you so much, Deepan, for joining us on the show, for sharing your views coming in on various sectors. But Kunal, I'm sure you will be able to tell this one or give a view on this one for all of our viewers, and that's what's your closing trade.
Absolutely. So it's on Wipro, and interesting chart because the stock continues to be one of the more robust large cap IT names. Still looks very attractive. I think today, intraday wise, the stock has made a fresh swing high, coming back to that 310, 312 mark. So I think if it manages to close above this 312 level, Wipro could be a good BTST as well as a closing trade.
All right, so that's the closing trade coming in from Kunal. Naresh, what's your closing trade?
So that would be a buy on Reliance Industries. The stock is holding up today and is still down good 20% plus from the highs of the year. So expecting it to hold the 1220, 1240 mark.
Okay, that's the view coming in. Reliance finally coming in the buy zone for Naresh. Maybe tomorrow is the day when it sees further uptick. Time for a quick break. We'll be right back for the 30 minutes of the trading session which are left.
Welcome back. You're watching Closing Trades on ET now, and you have the markets that are still languishing in trade today. 0.5% downtick coming in for the benchmark indices. We have Sunil Subramaniam who's joining us on the show right now to talk about the markets and more. A very good afternoon to you, Sunil. And we are almost towards the end of the year 2024. A lot of new themes have emerged, at least towards the fag end of this year. You have CDMO, which is finding new favor in the market. You also have the solar, the renewable energy theme also as one of the bright spots. What do you think in the year 2025? Do you think these new themes that have just found favor will continue with the same fervor?
To some extent, I think digital and those spaces are also something which India's artificial intelligence is playing a role there. So I think IT will have some element of new elements there. But if you look at the fact on 2025 is going to be dominated by Trumponomics, right? So what Mr. Trump is going to do, and there I see a big opportunity for in the PLI space for us to be partnering with China, because if China is going to be slapped with heavy tariffs and India not so much, right? 60% is 10%. So I expect that with the thawing of relationship on the political side, we could see kind of partnerships between China and India at a ground level, so that products are then sent to America made in India, but with Chinese participation in the value chain. So I think that's a new twist to the China plus one. So China plus one, you may call it. I think that will be probably a good story which will start playing out. I think it will play out in electronics, it will play out in pharmaceuticals, it will play out in some extent in textiles because of the Bangladesh issue. So I think you're going to see definitely some new twinges to the existing things like PLI coming up in the next year. The budget is also going to be a trigger to set direction. But on a solar part, probably on the looking at the oil scenario, right, with the China economy being weak and Europe being weak, though US is showing recovery, oil, if it's going to be trending down, then maybe alternative energies doesn't get that much of a push, right? Because if you get cheaper oil, then everybody tends to put alternatives slightly on the back foot. It's definitely a good long-term play, no undoubtedly about it. But in the short term, it's the oil which will decide whether the alternatives, the solar and everything else, gets a pickup.
Yeah, it comes down to oil yet again. But since we're talking about the digital themes and the new themes which we have seen coming up this year, of course, quick commerce was one of them. But clearly getting very heated with that as well, Sunil, and I'm not just talking about this dark store edition, but the fact that even now food delivery, there are new entrants coming in, whether it's Magic Pin, whether it's Ola Dash and all of that, and this would again mean profitability will be kicked down the road.
Yes, but in the new age, profitability is not so much as market share and expanding the market and gaining, like they used to say, eyeballs, right? Getting footfalls onto that, right? In a digital footfalls, if I say. So I think that it's going to be a bloodbath in terms of the economic activity there, but the stock market will still try and bet on the winner because it's going to be kind of winner takes all, and the losers will either get merged or acquired by one of these biggies. So while it's going to be interesting, it's definitely the way of the future because the Indian demographic changing towards the younger demographic means buying patterns are changing, and these are the companies which are taking advantage of that. So overall, as a space, I think it's going to be a great space. Who's going to be the winner is the million-dollar question. So if you're taking exposure to that space, best to diversify within 2-3 companies within that space, right? So I think that's the best. But definitely they are the game of the future, and you can't afford to ignore them. And profitability is not the main criteria on which the share price moves in these kind of new age entities, if I may say.
Nilesh, let me come to you, and there's one stock that I want to ask you about is Paytm. How are the charts for this one looking like right now? Because if I had to ask this question to you, I think 3 months ago, I'm sure you would have still been unsure about which direction is this stock headed to. But now it has surpassed the 1,000 rupees per share mark. Do you think that there is more scope for an upside for this one?
So technically, it's been a slow and steady up move all through after bottoming out. And it was not a move wherein we saw 10% move ticks and then continues on. Every move, we saw it being faded by some margin. So if you look at the move right away, all the periods. So even now we've had a 3-4 day up move. We could get a fade off, and 1,000 was the last price point back in 2023, which was a resistance. And the next one comes to at 1250, 1300, because that is where the price stabilized post IPO roughly for a couple of sessions. So for now, the trend is positive. A trailing stop loss now comes to around 970 odd levels.
Okay, so that's the take coming in as far as Paytm is concerned, and the trailing loss that one should watch out for on that one. Just taking stock of what's happening in the market, Craftsman Automation has managed to see a bit of an up move. Bharti Hexacom is doing quite well. Policy Bazaar is in the green right now. In fact, a couple of these insurance companies like GIC and NIA and even Star Health, as a matter of fact, were doing well in the trading session. In fact, talking about Star Health, my colleague Anurag Shah managed to catch up with the management earlier. Hear out a slice of that conversation.
We are growing at around 18% year on year, and this year for the first half, the growth rate has been 17.5%. Last year we grew at 18%. So we believe that, for us to achieve our, vision of doubling the premium to 30,000 crores by FY28, we need to keep growing at 18%, which we are very confident of doing. I think we should ignore this accounting changes in terms of, our reporting and our aspirations are more on the overall growth, the number of policies, the business volumes and all of that. So I think an 18,000 crore number that we have planned to achieve this year, we are quite confident of getting there.
Okay. And sir, what would be your share in retail and group business? And have you set any target for retail and group business also when you will achieve that 30,000 crore of premium?
I think the business mix today, Anurag, is around 92% retail and 8% group. And we are largely a retail B2C company, and our strategies and our future plans are also more on the retail side of things. So I think that focus will continue to remain. When we get into FY28 and when we get to 30,000 crores, probably the mix may change slightly. It may become maybe an 85 or 15, but bulk of the business will continue to be retail business.
All right, let's move on then. Sunil, what's your take on some of these insurance plays and which side are you betting on more? Is it the life insurance space or is it the general insurance space?
Because I think what COVID has done there is make a big awareness of the health-related risks, and hospitalization costs have gone through the roof. So I think it now pretty much everybody is brought to earth to say that if you're going to a hospital, you need an insurance. And whereas life insurance is still, penetration, it's like, it's been historically, if you know, sold on tax benefits, sold on assured returns and all of those. The awareness of life insurance is increasing, no doubt, but I would say that health is probably number one out there in terms of that space. So within general insurance, for me, health insurance is the top kind of a thing. And the second is because the per capita income rising. See, from some COVID time to now, from 2,200 to about 2,800, the incremental disposable income is people are now willing to spend on these kind of, health and those kind of things. So no longer, there is a K-shaped development there. That's why your consumption also, you're seeing K-shaped recovery. But even within these kind of products, the wealthier of the HNIs and all of that are definitely going to make sure they secure themselves in terms of health and that. And so life will also grow, but I would say that health is probably my number one pick there.
Okay, health insurance is something that you're watching out for. But Naresh, wanted a better sense from you regarding some of these sectors which haven't really caught too much attention. That's textile as well as chemicals. Finally, are there any names worth betting?
So in textiles, a lot of names have already moved up quite a bit. So if you look at any garmenting name, we've seen KPR Mills do well. We've seen Gokaldas Exports move up 20-25%. And other smaller names like Kitex has also done well. So the only name which is left in this basket, which looks interesting, is SP Apparels. The stock is closer to this 950, 980 resistance. If it crosses 980, that would be a good breakout. Similar sector name, SP Apparels looks interesting. And apart from that, there are more on the smaller spinning names which have given good breakouts. Vardhaman Textiles, Nathan Spinners. They would be good on good buy on dips.
Kunal, we are heading towards the year end, and I'm sure you must have already made your list of stocks that are likely the next multi-baggers when you look at it next year. Have you already made that list or no?
I'm still in the process of making it.
So if you're still in the process, which means you've already jotted down some names, isn't it?
So yeah, some of them I definitely have. So for example, one of the offbeat names which I was tracking was Hiranba, a stock which I think is at 400 rupees.
Okay.
That's something which is looking very attractive on the long-term charts, and especially with the fact that the stock has gone through a sharp correction. I also believe that many of the defense stocks, or the traditional defense names, I think these stocks should make a very strong comeback, and especially if one is looking at the likes of HL and BEL and other names like GRSE, Cochin Shipyard. So from a longer-term play, I think that 50%, 40% correction for these stocks which played out in the second half of 2024, I think that correction generally indicates that a major mean reversion has happened, and the excesses which were created at the start of 2024 for many of these sectors and spaces, I think that now is behind us, and so now the risk reward is attractive for these stocks. It's a matter of news flows, which starts to get positive into these names. That's where the price action would start to get a lot more synchronized for these defense stocks. So that's another pocket to look out for.
Okay, well, watch out for that and watch out for your list as well, as and when it keeps developing, because that's a developing story that we're all watching out for. But KFin Technology is up 8% on account of that Jeffries note. Bharti Hexacom has actually managed to perk up quite nicely. You have Godrej Industries up 5% and a lot of other stocks actually. But looking at the list of stocks which are sitting at all-time high levels, Radico Khaitan is in that list, 4% higher. United Spirits has been doing quite well for the last couple of days. Sunil, what's your sense on Alcobev industry? Because Alcobev and BPC both, because they both have these cycles that suddenly stocks like, Honasa, Nykaa Nykaa and United Spirits, Radico, etc. perk up, and then there are days when they do nothing. As a medium-term strategy, would you buy any of these names?
Well, I'll still not say stock specific because I'm an independent director with an AMC. So I can't talk stock specific, so I can only speak sectors. So from a sector call, I think that yes, these are definitely good. Good. It's a part of a good sector because high-end retail is where these come in, and I think that's a big growing story. I can't talk specific stocks, but yes, overall in the sector, I'm quite positive.
You can't talk specific stocks, but we are hoping Naresh will help us with that. Naresh, Honasa, Nykaa, Radico, USL. Tell me the top 2 recommendations from these 4.
So it would be United Spirits because that's the one which has underperformed and is getting closer to new all-time highs. So that's one. And Nykaa could be a bet which could surprise given that the stock has gone nowhere compared to what has happened in the whole new age space. And in the last 2-3 sessions, we've started seeing volumes over there. So I would go with Nykaa out here at 173, have a positive bias here, would keep a stop loss below 160 and expect, give it some time to actually make a move.
Let's talk about the IT sector because looks like and everyone's betting on the fact that the tide will turn for the IT sector for the better, hopefully. I don't know if Anisha will concur with that view or no, sitting right next to me. But also one critical point at one point in time, I don't know if that sort of a correlation has changed or it still relates, is the fact that every time the rupee weakens, you have the exporter names, export-oriented companies seeing an uptake like the IT space. That play also still persists for all of them. The fact that you have rupee weakening, it will be in turn positive for these IT players. Yeah, that's for you, Sunil.
Yeah, definitely. Definitely, the weakening of the rupee is a big positive because all of these are listed in India. So rupee EPS definitely will get favorably impacted by a rupee depreciation, right? In fact, IT is one of the best way to do global diversification for Indian investors, right? Because your dollar strengthening and rupee weakening automatically gets plays out in those shares. So definitely that's a good story. But I think IT is not just about depreciation. It's about the revival of the US economy. It's about the revival of the BFSI space in the US, which is one of the biggest buyers of Indian IT products. It's also about the growing AI revolution, where I think that Indian IT companies will start playing their part in that, right? Because they are quite smart and they are quite interconnected with their buyers. The other reason for buying IT for me is the fact that FIIs get a great deal of comfort from IT because that's one industry where they can get both sides. See, all the buyers will be their, contacts there. Right? For any FII, US-based FII, he will know those companies. So he can validate it, he can look at the growth projections, and he can take a call on it. So for all of these reasons, IT remains the favorite pick for me for the coming year.
Okay, so that's one of the recommendations for the coming year. But looking at the year gone by, and if I'm looking at the stocks which have given you the maximum return, lo and behold, you have BSE, which is up 150% this year, and it's been marked by a lot of topsy-turvy rides, but BSE has done well. CDSL is up 113% this year. CAMS continues to do quite well, 93% gain this year itself. Sunil, begs the question that this entire financialization of savings theme, the entire exchanges as well as the securities and the ancillaries, AMC, etc. Do you think this is something which will continue as a theme into next year as well? And are they still a buy after these inflated returns?
No. They are still a buy. In fact, they're not just going to continue, they're probably going to expand. Because you remember one thing, you're talking about the SIP book going from 16,000 to 25,000 crores. Now, every SIP, CAMS makes money off it. They charge fees for it, right? A lot of the significant proportion of SIPs are routed to the Bombay Stock Exchange portals and NSE's portal. So, if you see, and these financialization of savings they're talking, it's a big shift from bank. Today, you're seeing that mutual fund AUM is now more than 30% of bank, or more than 1/3. So, this shift of money from the banking system into the financial system, right? The listed financial system, whether it's mutual funds, it is PMS, AIF, it's insurance, health insurance, life insurance. All of those are I see as the big growth stories for India because of the demographic change also happening. So I think that these are places where I don't think that even at these valuations, they're fully priced in the kind of growth outlook. I see the SIP book going from 25,000 to 50,000 in a few years and all of that. So for me, this is a big play. because it's a play not only on the demography, it's a play on the per capita GDP increasing, it's a play on the financial literacy and awareness increasing. I think it's a it's a whatever, all the three are coming together like a Triveni Sangam. And so I think that these are growth businesses in which we must remain invested for the medium term.
All right, so that's the view coming in from Sunil when you talk about these market-related counters. But before we move further, Kunal, let me quickly get your BTST ideas.
So, one sell call and one buy call. The sell is on Tata Motors. So, this stock remains to be one of the heavyweight auto names which is still under weakness, showing signs of weakness. So, would be looking out for targets in the range of 740 for the next couple of days, and stoppers could be kept at 772. Wipro is the other stock which looks very attractive. The stock is confirming a breakout as well as a close above 312 mark. So, targets of 325, stoppers could be kept at 305.
And Naresh, what about you? What are your BTST ideas?
So first would be a buy on Reliance Industries holding on well, stop loss at 1240, target price of 1290. Second would be a sell on Tata Steel. The momentum continues to be down, stop loss at 146, target price of 138.
Okay, so there was Tata, which Tata stock did you pick? Motors. Tata Motors, and he also picked one of the Tata stocks. So let me actually talk about Tata Chemicals, because we did speak with the management earlier in the day. They did talk about how the problems with respect to soda ash pricing is expected to continue. It's not a problem that will go away in a hurry, but they do maintain that perhaps the pricing as well as margin is something that will keep improving as we head into the next year. They're working a lot in terms of bringing the cost efficiencies. They also talked about how government is trying to support the domestic industry at this point of time, but clearly that's one stock that we're watching out for. But talking about domestic protection, Sunil, steel is an industry, is one which has been looking out for that protection from the government for a long time, even though when you have, the users, whether it's the car companies, etc., which are against that protection. What do you think is likely to be the case for metal stocks come 2025?
Yeah, I think metals, China is the place to watch out for, because prices of metal products in India are still linked to the London Metal Exchange. And that's where China plays a big part. I don't see yet a big Chinese recovery. If the tariffs and all of that are going to be heavy, it's going to get much delayed. And like I said, China needs to diversify it outside. So I would say I'm a bit bearish on the metals pack in the current context, right? I will only turn around when I see a strong US manufacturing recovery happening, which in turn could fuel metals related down, whether it's copper, aluminum, steel, ferrous, non-ferrous, both. So for me, that trigger is there. It's the weak Chinese economy means that I believe that metals are in for a slightly bearish trend. So in that context, the question that you asked me about tariffs and all of those, well, it all depends, right? If the metal prices are dropping and they're trying to dump on India, then naturally India will have to counter that. But bear in mind that Trump is also going to look actively at what kind of tariffs you're putting on those stuff. So it's going to be a complex thing, whether the government responds to that. Because the government capex also slowed down, and that also hurt the steel companies in terms of demand. But in the second half, with government capex, I expect it to pick up. Then I think the demand for steel from the government capex spin-off will start. Private sector capex is yet to start in a big way. But when that does start, steel demand will pick up. So I think it's a temporary issue for the domestic steel and metals industry, but we have to wait for these triggers at government capex and this. And if international prices keep trending down, the user industries will be happy about it, but not the steel manufacturers.
Sorry to interject, but just wanted to take a look at a couple of these charts which are perking up. Naresh, what's the view on Craftsman Automation? A sudden sharp spike in an otherwise sort of a weak market. That stock is up 7% right now, and Techno Electric is the other one, and both of them have decent amount of volumes at play in the last few minutes. Anything on the charts that you are picking up?
So not really, because both are generally pretty illiquid, although they have pretty high institutional ownership. Techno Electric is relatively a better chart, wherein the stock has been consolidating in a sideways zone of 1400 to 1800, but no view on the Craftsman name as such.
Craftsman Automation chart yet again, because it was showing a rise. Oh yeah, it's now showing a rise of 14%. I think we picked up the wrong chart earlier. The other one, of course, which is doing quite well is Bharti Hexacom. That one is up 6%. Godrej Industries, IGL, Action Construction, Aurobindo Pharma, a whole host of names doing well in the trading session. And ditto is the case with Supreme Industries as well. In fact, Supreme Industries is something that we discussed with Chakri Lokpriya earlier, and he talked about how that company is also poised for good growth going forward. I'm not sure if we do have that soundbite that we can play. Okay, we'll try and kind of get that as well. But in the meantime, overall, the market setup has improved marginally. We are above the mark of 24,200. Okay, so Supreme Industries is something that Chakri Lokpriya was talking about. Let's hear out his view.
The company is actually very well diversified across the various PVC, polyurethane, all those kinds of markets, and it has a fairly strong market share across various segments. One of the company's strengths is it's is able to manage its inventory quite well because of the PVC and the various fluctuation in the raw prices, which are all oil linked. And the last 1 year has been very, very volatile, as we know, for the oil industry and its derivative products. And therefore, all these companies have suffered huge amounts of inventory hits and margin hits as a result, because they're unable to price their product well. So as this whole world of oil stabilizes and the downstream kind of stabilizes, I think Supreme Industry is a market leader, very well placed to do well.
Sunil, I wanted to ask you about the hospitality sector. December, or rather, the Q3 turns out to be much better for most of these companies, given the fact that you have a lot of weddings that is happening you have exhibitions, you have conferences. Apart from that, you also have now a lot of global bands coming to perform in various parts of the country. So that also will add to the gains coming in for the hospitality sector. But where do you see this one headed now, given the fact that year after year, the base is just getting higher?
Well, before I answer that question, why did you forget Diljit? Why you don't need to talk about global brands? Yeah, Diljit.
Diljit also. You got the tickets. Oh, they are playing tomorrow. He's going to perform tomorrow in Mumbai.
But isn't he a global citizen in that case, Sunil? He is a bit of a global citizen, right? Not just the Indian one.
You can call him that, but I would still say he's Indian brand. Made in India.
Let's agree on that.
Yes.
Okay. No, I think I'm very, very bullish on the hospitality, and the reason for that is 2-3 things. One is, as I said, per capita income, the lifestyle changes. People are traveling a lot more. Even, you have these concepts of people going off to a hotel for the weekend, just in the same city, but they just take for the weekend and go to a 5-star hotel and spend time there. So the attitude, the youth of India with the rising per capita income, the lifestyle habits are changing, and hospitality is a big, big part of it. And, you look at it, even medical tourism, Ayurvedic retreats, right? So many of the people are going into these retreats to chill out and, de-stress, so kind of a thing. So I think this is a huge growing space here. And I think it's a cyclical space, because in hospitality, you got to invest in the real estate, the property, the people, and all of those costs. But once they do that, it's a question of capacity utilization going up, and it's straight to the bottom line. So I would say that if you look at it, those who have expanded capacity in the hospitality sector, right, their current profitability could look depressed. But as the capacity utilization starts getting used up, because they just invested in capex, I see a huge V-shaped curve happening in their EPS growth. So I think picking good quality hospitality plays is a very good medium-term bet that we can make.
Right. Kunal, any names that you can give from the hospitality space that will look good even going ahead?
So I think other than Indian hotels, Lemon Tree is something which is coming back into a breakout mode. So I think it's the 4th or the 5th consecutive week where you've seen the stock coming back into a very strong recovery. I remember tracking this closer to 120, 110, 120 range. From there, the stock has moved to that 150 plus mark, very close. I think it's already confirmed a breakout of its life highs of 150 plus levels. So that's another name to look out for. And my sense is that this sector would be one of the few sectors which over the maybe next couple of years would probably keep on giving you those compounding kind of returns on a consistent basis. So whether you want to go back to the leaders like Indian hotels and try and take advantage whenever the stock gets back into a 5-10% correction, those are classical re-entry points or accumulation points for the stock, or whether you look out for fresh names like Lemon Tree, Chalet Hotels, etc., which also look attractive.
Okay, so that's the take coming in on the the hospitality sector. Apart from Indian hotels, there are other stocks to watch out for as well. But what we are watching out for tomorrow are the cues coming in. Of course, overnight, the biggest cue is going to be the Fed meeting, and the 25 basis point rate cut is pretty much expected. But we are watching out for the projections for next year. Tomorrow is going to be the weekly options expiry for Nifty as well. So expect some volatility on account of that. We're also expecting some more data to come in as far as US is concerned, whether it's jobless claims, and then the central bank decision coming in from Bank of England as well. So lots of macro points to really watch out for, and that's the reason perhaps the market was very worried today and the worrisome Wednesday really playing out. But for the closing trades, let me now hand it over to Snehi. Absolutely. Let's take a look at how we've shaped up for the day today, and fourth consecutive losing day coming in for our markets today. Nifty down slightly more than 0.5%, a 120 point cut coming in. We look like we are going to hold above the 24,200 level, but just barely. So let's see what happens in the last couple of minutes of trade. Sensex down more than 500 points from the day's highest point, but above 80,200 mark, a 0.6% cut coming in on Sensex as well. Nifty Bank, one of the biggest losers on the street today, a 1.2% cut coming in. And it's not only the private banks, it's the PSU banks also that were ailing when it comes to the market move today. We'll get to that in a bit. Let's talk about the broader markets and what they have done, because they have also been rather tepid in today's trading session. No show of support coming in from the broader markets as well. Let's pull up a Nifty Midcap, 0.6% uptick, downtick coming in on Nifty Midcap. Nifty Small Cap also one of the biggest losers, in fact, underperforming all its peer indices, almost a 1% cut coming in on the Nifty Small Cap index as well. Advanced decline ratio deeply in the favor of the declines today. However, what did well today on the Nifty was Trend, Dr. Reddys, Cipla, Wipro, Bajaj Auto, Reliance. It was your IT and Pharma pack that was shining away in today's trading session. Pharma has been the top sectoral gainer ever since the get-go. Mankind Pharma, Aurobindo, despite the two USFD observations coming in. Lupin, Dr. Reddy, Alchem, all of these stocks have done pretty well. Nifty IT also has done very well in today's trade. Given the sideways market today, Wipro, Coforge, TCS, Tech Mahindra, all of these have done well. What's not done well is the PSU banks. You have SBI, Canara Bank, Indian Bank, Union Bank. All of these have been top sectoral losers, top losers in the PSU basket today, followed by metal, bank, energy, auto, realty, FMCG. These are your top losers in today's trading session. But well, that's how we've summed up for the market. Couple of gainers and losers. Vieta, Quebec was in focus, RITES, Ambuja Cement and Sanghi Industries. All of these stocks were the big news makers today. But other than that, just to sum it up, we look like we've held on to those 24,200 levels. Nonetheless, a 0.5% cut coming in on the Nifty on intraday basis.